Welcome, everyone. Today on the podcast, we have Gauss. I've had a chat with him earlier on about NFTs, and that is precisely what we're going to be talking about today. I think Gauss has some pretty interesting insights about the NFT space, how to build NFTs, and how to trade NFTs. He's a coder, a builder, and a trader, so I'd love to pick his brains today. Before we start, let me just say, nothing here is to be taken as financial advice. Myself and my relations may or may not have positions in the projects discussed on this podcast. Do your own research, and this podcast is simply for educational and entertainment purposes. So, having gotten that out of the way, let us dive right in. So, to jump off, can you give us an introduction of yourself, Jaus? What was your background? How do you get into crypto? And what was your first NFT purchase?
Well, yeah. First and foremost, thanks for having me. It's a real pleasure to be here. It's quite funny to see my face move as you speak as well, and so hopefully that's not too bad for the viewers. But it's very interesting to play around with these new avatars. It's been quite a fun experience. I'll happy to jump in and talk about my background. I grew up doing a ton of math and have sort of a deep sort of machine learning and cryptography background. On the back of all the math camp T-shirts, when you're a young guy, it always says, Jane Street, D Shaw, 2 Sigma. And so I had some sense that a lot of my smart math friends were going into trading when I was younger. And so I, worked at one of those for a bit and worked at one of the big crypto trading firms as well, helping spin up some of their early quant ops and really got thrown into crypto in that sense. And so that's sort of my background. I'm now building a lot of NFT primitives and doing a lot of stuff in the NFT space. So I'm sure we'll have a lot to talk about here.
Do you remember your first NFT purchase?
Yeah, I think it was a CryptoKitty back in probably December of 2017, back when they were the hottest project of that time. I remember sitting in the back of a Stanford lecture that I snuck into back at that time, and that's why I initially learned about that team and the projects. It was quite a fun experience back in those days.
I see. Well, we're going to talk mostly about NFTs today, but for the less crypto-savvy audience, perhaps we can start off with a simple question that all have in their heads, like what are NFTs? And most importantly, what is the point of an NFT in your view?
Yeah, it's a great question. It's very important to sort of establish these fundamentals. So obviously, these are non-transferable tokens, or there's a very technical definition of these, and you can basically look up and see exactly the ERC 721 standard, and it's really a pretty simple maybe on the order of 50 lines of code or something like this. And so if you really want to grok exactly what it is, I would really recommend looking and peeking at that. Maybe a link could be included in the show notes. But at the highest level, NFTs are just cryptographically provable ownership of digital assets. And so this could be visual art, PFPs. It could be, the deed of the house that I'm standing in, or it could be sort of like all these sort of like bespoke financial contracts and really anything. And so I think that it really is going to underpin very much of the digital economy moving forward. And so it's a very important primitive as we sort of move digitally.
Okay, so earlier on this year, we've seen the emergence of decentralized NFT marketplaces like LooksRare and X2Y2 and a couple of others. But none of these decentralized marketplaces have really eaten into the market share of the giant OpenSea. We've also seen the launch of the Zora NFT Marketplace protocol, and this you can see the fact that they didn't really take the market share of OpenSea could be seen from the fact that if you discount the volume you see on these marketplaces for wash trading, there's actually not much there. So what do you think is missing? Why aren't people migrating? Why aren't degens and crypto-savvy people moving away from OpenSea into decentralized marketplaces?
Yeah, it's a great question. So I think you definitely hit the nail on the head as far as a lot of this wash trading goes. I think incentives are very well aligned for people to want to do that. And I think that's a market failure that we're seeing over there. In terms of why it hasn't taken off and why it hasn't overtaken OpenSea, this is something that I think a lot about. I think we can get into this at any level of depth, but I think it's really there's a lot of core product to build, and I could sort of work you through what I think would go into sort of a necessary NFT product. But there are a lot of these primitives to add, and really just core workflows that I don't think that they've done correctly. I think fundamentally NFT marketplaces are too fragmented, right? And so we're seeing as sort of a meta trend within crypto, aggregation as being a very strong methodology, right? We're seeing with 1inch on the AMM side, aggregating a lot of liquidity across all these sort of different AMMs, and I even think at the highest levels we're going to aggregate across different protocols. I think the average user isn't going to know if it's routing through Near, Avalanche, or maybe our Arbitrum is congested for a particular moment, so we route it through Optimism or something like this. I think a lot of this is going to be abstracted away, and so I think an aggregation layer is going to be really a crucial piece of that. And so, the user should really just have to look at one site instead of 12 for all their NFT needs. And I'm happy to break down that the sort of like pipeline for the average NFT user. It's there are too many different sites that they're going through currently.
Can you talk a little bit more about aggregators? What do they look like, and how would the user experience look like? And are there any aggregators out there for NFTs right now?
Yeah, it's a great question. So Gem is sort of the one that comes to mind. They're very recent. I built a lot of this internally in the Solana ecosystem. So because of my trading background, I built a ton of NFT trading infrastructure for Solana, integrated with SolC and Digitalized and Solana Art, and most recently Magic Eden. But did a lot of volume in the September, October, November era, and happy to talk about that at any depth. But we internally built our own aggregator for the Solana ecosystem, and really just being able to serve up all the NFTs in an ecosystem all in one place is a really killer product. And I think that's what the core NFT experience is going to look like for the user, and sort of the optimal case, right? It shouldn't just be the Solana NFTs. It shouldn't just be the ETH NFTs. I think they're going to be one website that serves up all of the NFTs that are in existence, all in one place, and make it easy for the user to navigate.
I see. So let's play a little game, yay or nay. I'm going to list you a series of features, and then you're going to say yay or nay for them, and perhaps give a couple of comments on what do you think about these features, like whether they should be included on your ideal NFT marketplace / aggregator, and so on. So let's start with the first one. Finder's fee. So a note, a finder's fee, say for example, sort of pioneered by Zora, and a finder's fee is a mechanism that allows people to incentivize the market to find the eventual buyer of their NFT. This is set when you list an NFT, and to earn a finder's fee, simply include one's address, either programmatically in a UI or by generating a link. You'll earn that reward if you find the buyer. So finder's fee, yay or nay?
All right, so my answer here is yay, and I can give you sort of a high-level principle that I think will probably apply to a lot of these. Is that I really think getting more and more detailed and granular really makes these markets better and better. And so I think the Finder actually really does play a core part of this experience for getting these NFTs bought and sold, and sort of bringing people into the ecosystem. And I think they should be compensated accordingly. So yay for Finder's fee.
Okay. Second one, non-custodial listing.
Yeah, very interesting. I'm definitely of the sort of like deep crypto hypothesis, and so I'm pro decentralization, and I'm pro sort of not non-custodial. Not your keys, not your crypto, and so definitely I would want our users to hold their own.
I see. Okay. Free NFT listing, no Google Forms or curation.
Yeah, I think it's a good idea. I think there's obviously curation can help prevent a lot of scams and fraud and sort of a lot of this stuff. And so there's a fine balance there, and it's a worthy trade-off. And adding some sort of verification, I think is a really crucial piece. But I'm definitely here for permissionless, sort of like decentralized listing, and so I don't think that this should necessarily be routed through a particular human-centric perspective here.
Okay. What about lazy minting?
Yeah, lazy minting is a good idea. I think it is pretty efficient, and I think users, yay, yay there.
Okay. Which one do you prefer? Openzeppelin's ERC721 or Solmate's ERC721?
Yeah, Openzeppelin is definitely like kind of legendary for like bringing forth the NFT era, and that's the one that I would recommend users look at sort of initially. But I've been very impressed with the Soulmate developments, and so when I'm building out NFT projects myself, that's the one that I use personally.
Okay, content encryption.
Oh, very interesting. Yeah, this it reminds me of a numerize erasure product or project where users would make predictions about uh, you know any sort of prediction, whether it's equities or weather, or sort of like arbitrary predictions, right? And so they would build a reputation on chain, and by being a better and better predictor, they're able to sell their predictions for more and more. And this is time locked in a very sort of a specific way. And so I think there's a lot to do in sort of marrying this with NFTs or something like this. And I think this area has been underexplored. So definitely yay.
Okay, so the EIP 2019-81 royalty standard. And for those who don't know what this is basically a function that returns information about the royalties that are set by the creator. Before this, royalties are distributed and recorded and administered by centralized exchanges through their database solution. So, say for example, on OpenSea, if before this EIP, they basically have a database and records how everybody makes their sets their royalty percentages, and then they just execute it centrally, which means that if you sell your NFT or transfer your NFT from OpenSea to another marketplace, the royalties don't apply over there if you trade over there. But with the EIP 2981 standard, as long as that marketplace supports that calling that function, the royalties will be respected. So, what do you think of this feature?
Yeah, I think it's a great idea. I don't think we should have to rely on centralized entities to pay creators, and if we can do this in sort of the decentralized world computer, I think that's absolutely the correct way to go about this. So I'm very excited about a lot of new NFT sort of EIPs and developments on that front.
Okay, IPFS or royalties, IPFS or Arweave.
Ooh, yes. I'm personally more of a fan of Arweave. I hope this doesn't cause any tensions, but I think they're both. I think they're both great. I think there's been a lot of issues around permanence on IPFS, and Arweave definitely incentivizes users to sort of like protect data for forever functionally. And so when I've listed metadata for NFT projects, I've used Arweave personally.
Okay. Reflective royalties. So, for those who don't know what they are, so an NFT collection is said to have reflective royalties if a certain percentage of the royalties collected by the creator through transaction volume are redistributed back to the holders of the NFT, sort of like SafeMoon, but just with royalties. It is sort of technically difficult to implement. A relevant implementation, which I really encourage my audience to take a look at, is moneypipe.xyz, a fantastic repo. So, what do you think about that?
Yeah, I think it's a great idea as well. I think it was interesting how it was implemented with SafeMoon, and obviously that had a strong PMF on the ERC20 side, and I think it definitely should be a core part of NFTs moving forward.
Okay, final one, P2P NFT trading.
Yeah, this makes a lot of sense to me as well. I think I would say that centralized clearinghouses are actually kind of important for a lot of marketplaces to function correctly and efficiently. Although I don't necessarily see any real issues with P2P and NFT trading. So yeah, if you just want to do a swap yourself, and that can all be done through a particular contract. So I think yeah, I think it's a great idea, and also sort of underdeveloped.
Okay, so let's talk a little bit about how you would design your NFT marketplace. Like, you must have thought about this quite thoroughly. Like, what features you're going to include, what features you're not going to include, like, and how the entire user experience is going to be like. Can you walk through us about how you're going to design the best NFT marketplace that you can imagine?
Sure. Yeah. Yeah. I think it's a very valuable exercise. So, like I mentioned, I spent a lot of time thinking about Solana-based NFTs. I think that's sort of the best developed from perhaps like a PMF perspective or something like this. Even though Ethereum obviously does the most volume, but that's the one that I know the best. And so what are the core stages for an NFT user or trader over there? I think there are sort of like top 5 key features, and so they initially start and this is where I gesture with my hands. The avatar can't see it at all, but that's okay. Um, yeah, so the first one is the mint calendar, and I think that's really the starting place for a lot of NFT users. And so on Solana in the early days there were tons and tons, and that's definitely number one. And so I think that's absolutely a core feature if you want to build the one stop shop for all things NFTs. Number two is the launchpad. Again, on Solana, everyone was basically building their own websites for this. Now Magic Eden is incorporating their launchpad, and I think that's a good idea for them. Um, and so, yeah, that's absolutely a core piece of the puzzle there. Then obviously the marketplace is number three, and that's sort of the core one, and that's something that OpenSea has built out and is really the sort of the core feature there. And then number four is the rarity tooling, and so I think that's something that really got kicked off mostly by the Solana ecosystem, in my opinion. How Rare is in Moonrank and some of these, I think are also very crucial. I think they're also sort of underdeveloped as well. I think a lot of these rarity toolings are quite naive. And so because of, again, my trading background, I've built pretty robust pricing algorithms for all of these. And I think it would be quite interesting actually to provide some sort of sense uh, for basically like for just how valuable I guess the exchange thinks these NFTs are, because you can have something that is rare but also bronze instead of gold or something like this, and you can definitely learn a lot of these features. So yeah, the rarity tooling is number four, and I think number five is definitely the trading stats, and that's Soul Analysis did that quite well, and obviously, OpenSea and others have incorporated that as well. And so those are sort of the 5 key steps that you would want to build, all in one place. Like we mentioned about aggregation, I think that, sort of killer NFT app will have listed all the NFTs on the planet, sort of all in one place. And I think like that's definitely a table stakes to sort of be a candidate to be the best NFT exchange on the planet. I think Gem is doing a lot of interesting stuff with sort of low fee bundling, where you can buy sort of bulk purchases of NFTs, and they're bringing down gas costs for that quite efficiently. I'm thinking a lot about the Avalanche NFT ecosystem, and I think there's a lot to do in terms of subnets and sort of like optimizing that experience over there. I'm quite bullish for Avalanche NFTs moving forward, and I'm happy to explain why. I think they're basically right where Solana was 6 or 9 months ago, and I think they're sort of like ripe to blow. I think everyone basically has this sense currently, and so I think that's the ecosystem that I'm most excited about moving forward.
That's very interesting. I would like to ask a little bit more about the rarity tooling and your opinions on that. Specifically, what makes a rarity tool good and non-naive, in your opinion?
Oh yeah, great question. So a lot of the rarity tools, like How Rare is, for example, they'll literally just look at the attribute count, and so somehow more attributes ends up being more rare or something like this. But then you just get all these you get a top hat, you get a mustache, and you get sort of like all these different features all together. And I think that's not exactly what you want when you want sort of like the rarest golden one. I think you yeah, you have to have some sort of like probability of also not having that trade or something like this. And yeah, I think a lot of those purchases are quite naive, and I think this is a place that looking at actual trading prices is quite valuable. And so yeah, this is some standard clustering analysis, or like you can do a lot of visual analysis as well on the ML side. So yeah, there's a ton to do there, but I think that naive approach is sort of mislead people. But there's also this reflexive property, almost in like a Soros sense, where uh, the rarity rankings will actually sort of inform the price of these NFTs, and we've seen cases where rarity tooling will come out maybe days later or something like that, and it'll notably shift this sort of like price distribution in the market. At least for Solana NFTs and for How Rare is or Moonrank. And so it definitely has an effect. And so getting these things right actually does affect the price distribution of the NFT marketplace.
I see. So let's talk a little bit about a specific class of NFTs, or a particular a class of NFTs called Soulbound NFTs, which I think were first talked about by Vitaly Buterin, and I think you also built an implementation. You were quite interested in this whole thing. Can you tell us what they are and how they can be implemented, and why are they of interest?
Yeah, absolutely. So I think Vitalik wrote this essay about 6 weeks ago, and it speaks to the fact that there are some class of NFTs that don't necessarily need to be transferred, and in fact, I think this is a property that hurts them in some cases. And so, imagine if you complete a course. And they issue you a certificate, claiming that you completed the course. You shouldn't be able to buy a Harvard degree on open markets. That doesn't make any sense. And so, yeah, there's some class of NFTs that should be bound to you perpetually, and I think that's actually a feature and not a bug.
Okay, so how do you implement it? Do you just remove the transfer function?
Yeah, frankly, it's actually pretty straightforward. I think that kind of gets you. Yeah, it really does get you there. There are potentially things to add on to it, but that's really it.
Okay, so like when I first saw this idea, I felt, oh, okay, it makes sense to me. It's kind of interesting. But when I start thinking more about it, like say for example, when you think about objects in the real world that sort of map onto soulbound NFTs, like say for example, objects or souvenirs that represent very special experiences, like war medals or Olympic medals, like there's no point for, like you said, there's no point, and it's ridiculous for you to be able to buy
Yeah,
an authentic one from the market if somebody is able to sell it. But I'm reminded of cases where World War One veterans who are not very well taken care of in the interwar period, where they have to sell their medals to make a living, or Olympians who again didn't do very well for themselves after they've won the medal. They have to sell their medal to well keep themselves afloat. I'm thinking of whether a soulbound NFT with the transfer function removed actually well, it clearly is not able to replicate those functions, but it probably should, right? So the value of a soulbound NFT is not so much. Um, the value of a soulbound NFT should come from from its minting origin and and its special place in time and space and the event that generated it, but not so much the fact that it cannot be transferred. So, what do you think about that? How can we replicate that? It's probably got to be a non-trivial exercise to actually build that, right?
yeah. I think you hit the nail on the head there. I think there's a very interesting middle case, and I think when I sort of thought about this middle case, I think perhaps the heritage of an NFT like really does matter, and whether or not this was a war medal that was sort of dedicated to a particular person, right? If we stay with the ERC 721 standard, and that somehow the owner gets transferred to someone else, and then totally loses the connection to the initial person, I think that's a real shame, and so there should be perhaps some way of maintaining a chain of all the historical owners, and obviously you can look on chain as well and just see all those transactions. And so maybe that doesn't need to be included in the metadata of the NFT. But I think you hit the nail on the head where perhaps you saw Michael Jordan play like his first game or something like that, and in the real world you have like a ticket of this, and it's very special to you personally or something like this. It's it seems like you should, that's a particularly special moment for you personally. And, it would be hard to imagine someone else having, more joy at this particular sort of like externally sort of random moment than you do. But yeah, I think it's possible that you should basically have the heritage of built into the NFTs, and frankly, this might already be shown on chain. So yeah, that's how I would frame it.
Okay. So I think Soulbound NFTs is a very interesting and probably underdeveloped idea in the NFT space. Probably an innovation that needs more development. Another similar NFT innovation that quite a number of people have been talking about, and a number of projects are already implementing, is NFT rentals and the opportunities they represent to the NFT space. So there are a couple of models. So what do you think about what is your favorite implementation, and which one do you think is going to win out against the rest, or do you think that there is going to be a plethora and a diversity of NFT rental models that they're just going to exist for different prototypes and protocols?
Sure. Yeah. Great question. So I would split the NFT rentals into two classes. And so The first class, and this was the one that I think was discussed first in the general, crypto Twitter ecosystem, and that was basically borrowing and lending against a collateralized NFT, where you're borrowing ETH or something of the sort. And so that's definitely one type of borrowing and lending with respect to your NFTs. And if you want to borrow and lend your actual NFT, where you're renting it out or something like this, where you're actually permissionlessly lending your NFT to a friend, a colleague, a stranger, or something like this for a concert that they can attend, or some token gated event that you're out of town for. I think this is actually quite an important primitive. And so, yeah, it's definitely quite useful. And so, as far as which model I think would work well, I think there are basically two, another two cases here. So, if the NFT has already been created, let's say you want to lend out a crypto punk and someone wants to flex it on their Twitter or something like this, you're already sort of locked into the ERC 721 standard, and I think it's very hard to sort of get around that. And so, I think the case that I've thought the most about, it was just basically collateralizing that NFT, where they put up, they pay a fixed amount for maybe a week or something like that, and then they also put up the collateral, where if they don't return the NFT, if they somehow lose it or burn it or sell it or something like that, it's effectively as if they had purchased the NFT, perhaps at a premium. And so I think that model is what we're sort of locked into if it's already been minted as an ERC 721 standard. I think moving forward, we should create a standard where renting is actually part of the initial contract, and this sort of time-based rental is actually a function that can be called in the contract. And so that sort of is far more capital efficient than putting up all the collateral that's necessary to effectively purchase the whole thing. So that's how I would think about that.
Okay. I want to ask a little bit about the time component of a NFT rental. I'm not a particularly good dev, but as far as I know, from I first started at Solidity several months ago, time has always seemed to be a very, very tricky thing in Solidity. It seems to be a component or an object that is open for exploit and hacking. So I've been sort of warned by people to try to not use any component that is dependent on time in any smart contract that I code. The other thing that I should stay away from is for loops. So what do you think about it? Does that understanding still stand as of today, or do you think that there are still problems with dealing with time in Solidity smart contracts?
Yeah, I think that's definitely great security advice for sort of a new Solidity dev, and I think that makes a lot of sense, and it's definitely something to be cautious of, especially your for loops that you mentioned. I do think that there's a lot of interesting stuff to do with respect to time, but there are also interesting ways of getting around it. So I'm trying to think about the NFT rental protocol in the context of removing time as a variable here, and I'm wondering if that is even possible, at least with the collateralization method that we discussed, without introducing perhaps like a third party who has to sign off and had that and their vulnerabilities there. Is this something that you have some thoughts on?
Um, by removing time, I'm not sure. I think it seems like rental by itself is intimately tied to time, right? By definition, renting is gaining an asset for a short amount of time. So if you remove time, it seems to be impossible to implement any kind of rental. So it has to measure some kind of times, either on the Ethereum blockchain or by calling some kind of oracle, or it has to it has to access some time information from somewhere. So
Yeah.
without time, it doesn't seem to make sense. So I suppose that is sort of the reason why people were so skeptical about NFT rentals, because without any secure implementation of time, you just can't do this thing, can you?
Yeah, exactly. And so I think using standard Ethereum block time is probably safer, in my opinion, than using an Oracle. But it depends on a lot on the implementation of the Oracle. It just seems like there are probably far more dimensions across which, or even surface area across which to attack the Oracle. And so standard Ethereum block time seemed fine in my implementation, but now that I think about this more, I'll look back into it. But I think it should be fine.
Okay. Can you tell us a little bit more about what NFT rentals are actually good for? Like, for our viewers who may not have the imagination or um, the the foresight to actually see how where this thing will go.
Yeah, absolutely. And so, like I mentioned at the start when we were talking at a very high level about, cryptographically provable ownership of digital assets, eventually we will also, tie these things to physical assets. And so, the deed to the house that I'm standing in, right, I should be able to open my door with some, provable ownership of my house. And if I want to, rent my house out to you or something like this is actually something that a transaction that can happen on chain. And then, now your phone opens the door and mine does not for, a week, a month, or sort of whatever the term is of the rental. And so that's a very standard physical world application. I think as we move into, more digital worlds, in-game items, for example, if you want to, you don't have to pay for, a full kit in Fortnite or something like this. Or imagine you want to buy a digital sword and you don't want to pay the full price. You just want to have it for a week and try it out or something like that. That's absolutely something that's going to be deeply integrated into our digital experiences. And so, yeah, this is one of the primitives that's probably, older than civilization, right? You have some sense of renting out a thing to a person, and you basically have to collateralize it in some way, or assume some, social debt or something like this. And so, yeah, I would think because it's so old and so ancient, it's amazing to me that it's just now sort of like seeing the light of day, and I think it's going to play a very important role moving forward.
I see. So, as I understand, and as you mentioned, you have a background in trading. So, let's talk a little bit about that. What did you trade, and what's your
Yeah.
favorite strategy?
Sure, yeah. So we mentioned the NFT trading quite a bit on here, and so I'm happy to keep talking in that direction. I think there's a lot of interesting work to do, and uh, I'll say first, in the very early days, it was quite interesting and easy to basically, if someone lists something egregiously below the floor, you have some trading system that picks it up and pennies the floor, and that's basically V1 as a trader is just like good, fast execution and building out those sorts of systems. As you sort of get more and more complex, I think there's a lot of interesting, cross-exchange stat arb to do, where, within a collection, there are these characteristics that trade approximately at this price, which is cheap over on one exchange and rich on another exchange. And you can buy low and transfer it over and sell high. And you can basically do this all day for weeks and weeks and weeks. And so I've seen the counterparties in the Solana NFT trading space are actually not that sophisticated. What I've seen so far, and so this isn't my game anymore. I'm sort of off the building, and so I'm happy to happy to talk about the real opportunities there.
NFTs aren't liquid, right? They are, well, they're very illiquid if we ignore the NFT liquidity solutions out there. So how does the fact that they're not very liquid, impact the trading strategies that you can generate for NFTs? Like, how does NFT trading differ from trading, say, for example, equities or derivatives?
Sure, yeah. It's quite a different paradigm than something quite liquid like equities or options or any of these super liquid derivatives. I would say it's almost the illiquidity definitely creates some similarities to maybe even like a Moneyball type situation where you're buying and selling baseball players or basketball players or something like this, where they're sort of discrete objects and they're obviously non-fungible. It definitely doesn't have the same sort of interrelation where you're constructing a baseball team and you need these positions or something like this. I guess if you're thinking about covariance within your portfolio, you actually they are not sort of independent, and you're not just EV maxing, and so you do have to construct a portfolio in a way that maybe you would construct a baseball team or something like this. But as you mentioned, time to liquidity is actually a very important function to think about and to really get right. I guess the naive approach is you would come up with some price for the NFT and then wow, like, hey, like we price the NFTs and that's amazing. We're so smart. And then you sit there for a second. You say, okay, like now what listing price do I put, right? And this is actually sort of non-trivial. You have to think about well, if I list it at exactly what I think it's valued at in whatever sense you generate that, um, uh, then then you basically don't make any EV on that trade. And if you list it far lower, you're sort of losing on the trade, but you're also more likely to get liquid faster, right? And so, like I mentioned about, traders coming in and automatically picking something up on the order of, seconds or less if it's really, really low. You can really think about this, monotonically increasing function of price and time to liquidity. And so really getting the shape of that correct and being very thoughtful about that is important.
That's a lot to unpack. Let's talk a little bit more about that. So, for those of us who are not Americans, can you explain to us what is a Moneyball situation? We don't play baseball. We don't have any baseball here. So, can you explain to us what is a Moneyball situation and
Sure.
why do you think it is comparable to NFTs?
Yeah, great question. So I'm alluding to the Michael Lewis book, and then now a movie about the Oakland A's, where it was sort of some of the earliest quant work that was applied to the field of baseball and what's called sabermetrics. And so yeah, it's basically applying quantitative methods to buying and selling and trading baseball players.
Okay, so in this particular case, in this particular analogy, the baseball players would map to the NFTs. So you apply the quantitative methods that people have developed for trading baseball players. That doesn't sound so right. They're people after all. So you apply that methodology onto trading NFTs, treating NFTs like baseball players in the same regard.
Yep. Yeah. That's correct. I think it is a nice analogy in some senses, and it sort of like loses in other senses. Sort of like we were talking about the portfolio construction and cohesion on the team and sort of all that. There are definitely like very human aspects to how you would construct your baseball team and all that. So I don't want to map it on too tightly, but it is an interesting map as compared. It's not exactly trading equities. Is what I mean.
I suppose another difference between the Moneyball situation and the NFT situation is that NFTs themselves do not generate cash flow yet, whereas baseball players, they generate cash flow for the team when they win and when they get sponsorships and so on. Maybe the mapping will improve further on when NFTs start to be useful in, say, for example, a game or whatever protocol that uses them to generate cash flow and so on.
Sure. Yeah.
So
I think more and more NFTs are implementing staking and giving a reward to the token holders, and some of the yay or nay features that we had discussed. And even if you look at Solana art, you really have to think about some of the bespoke differences between these. Solana art has their bold badgers, which effectively, if you own 10 of them, then it's whatever, 25 bips for your trading fees. And if you own 20 of them, then it's 20 bips or something like this. And so each of these NFTs have their own sort of like DeFi-ish complexities on top of them. So yeah, they definitely get quite custom.
okay, so I want to ask a little bit more about what we just discussed. Can you explain to us what is time to liquidity?
Sure, yeah. That's the approximate sort of expected time from which you list the NFT to having a sale. And so one interesting thing is, and you learn this when you're sort of like an equities trader or something like this. You want to fade your asks and bids at particular information. And so you would think that imagine you have a bunch of NFTs listed on in a particular collection. And imagine there's very little volume. Every minute or hour that goes by, you're sort of less and less likely to continue getting more volume on this exchange, because it's autocorrelated in interesting ways that the liquidity is. And so you want to basically fade your offers every hour or something like that in very minute ways. Yeah, you have to think about the listing fees and really run that calculation. But yeah, so you'll fade your offers sort of as liquidity dries up, and as liquidity increases, you're sort of more probable to get liquid, and so you want to basically maximize your expected return by sort of like increasing the price of your NFTs. And you have to think about this in an even more nuanced way, where within particular characteristics, let's say that some whale comes in and they pick up a very famous one or something like that. The odds are high that NFTs with those same characteristics are more likely to trade in the coming, minutes, hours, or days, and so you'll increase those offers as well. And so that's some sort of standard trading that I'm really not seeing hardly anyone do.
What are some really weird NFT ideas that you have come across that you look forward to being implemented in the near future?
Mm. Yeah, I think Paradigm has had a lot of sort of very interesting, almost like DeFi-ish or very fractionalization focused NFTs. I'm sure people are, or maybe not. If you're not, you should look into Ricks and Crisp and Martingale shares and Floor Perps. Those are some very interesting ones that were put forth by Dave and the Paradigm team. I think they're quite sharp and definitely worth exploring. We've thought a lot about, like a firm style, buy now, pay later situation for NFTs where you can imagine you want to buy this in-game item or something like that. You want to pay over 5 chunks over 5 weeks or something like this. I think that's absolutely something that's going to be implemented in the same way that we've seen this in traditional markets. Also, I think there's a place for an anti-rug protocol. For example, most of these NFT collections are minted by mostly anonymous founders who are getting a massive payoff right up front. And so they're not well incentivized to do the things that they promise, right? And so if they have this big roadmap, you should actually have the NFT holders vote on when each step of the roadmap has been completed and deploy capital accordingly. So I think there are tons and tons and tons of these NFT primitives that are basically just sitting around waiting to be implemented. And so that's what I'm quite focused on these days.
I think it's very interesting that you should mention DeFi and NFT so closely together, because in my conception, the two things have been mostly separated. Like the innovation in DeFi has so far not been carried through or implemented on NFTs. But for example, the examples that you mentioned, for example, floor perps for NFTs or fractionalizing NFTs for them to be built upon by what we're familiar in DeFi is really interesting, right? So, what can you give us some more clout and color as to what are some possible DeFi protocols that can be built on top of NFTs that you expect to see come out in the coming months?
Yeah, I think we really are gonna see a re-merging of NFTs and DeFi in very like colorful and interesting ways. So I think floor perps is rolls off the tongue quite well, but you actually wouldn't want it implemented sort of in a naive way where the perp is tied to the actual floor price of these NFTs. It's very sensitive, and anyone can sort of list an NFT at 0.01 of whatever token that you're using to nominate this, and so it's actually quite sensitive or to manipulation, and so you would have to be very thoughtful about how exactly you want to construct the perp, and so maybe it's some sort of mean of the middle 2 deciles or something like this, or you can get like more and more thoughtful. There's definitely some math to do there in terms of basically maximizing stability here, and like reducing sensitivity in the sort of most in a way that would require the most capital for manipulation or something like this. It doesn't mean that it couldn't be manipulated, but it definitely is important to get this right. And so from that, once we have perps for, CryptoPunks or Bored Apes or sort of what have you, now the average user can participate in sort of own sort of access to the, upward or downward movement of these things. I think in terms of fractionalization, they can actually not only own access in this, perpetual futures type way, but actually they can own legitimately, 10 bips of a CryptoPunk or something like this if they choose to fractionalize one of these. And there are interesting ways of sort of recombining this. I think this is well discussed in Rick's, the Paradigm essay. So we're going to see these things fractionalized and then reconnected in sort of all these different ways. And so it'll be crazy when we have NFTs for all these different items in the real world or the digital world, where imagine they're NFTs for your favorite coffee shop or something like this. I think we're going to see a lot of social NFTs where maybe Chipotle or Burger King, we're going to see a lot of these brands buy their own NFTs. And so imagine if you can go long like Tex-Mex or something like that through perps of, particular restaurant NFTs or something like this. Or, you think, Chinese food is really going to hit in the next, coming weeks, and you want to make a particular bet and have exposure to like different cuisines or something like this. Like that's sort of a very random example of like how deep and how specific our ability to sort of like have access to these different I don't even want to say sectors. It's like beyond sectors, but yeah, these baskets of assets.
Considering the fact you have thought so much about NFTs and the space and its trading, what are some projects that you're building to implement all of that philosophy?
Yeah, so I'm currently in R&D building this exchange called Kepler, which we're very excited to launch in the coming weeks. I think we've got a lot of good stuff built out, and I think people will be very, very happy with a lot of the work that we've done. So yeah, stay tuned.
Can you tell us anything more, or is it going to be a secret until you release any more information?
I think there's a lot that we want to do, and a lot that's sort of gonna unfold. And so I guess I'll leave it at that for now. But
Okay.
launching pretty soon, so it should be exciting.
Okay. Well, that's all, folks. Thanks, Gauss, for coming on to our podcast. And for our listeners, if you found this interesting, please subscribe and turn on notifications. Follow me on Pyrite and follow Gauss if you can find their Twitter, Medium, and Discord.